So just a short introductions to these gentlemen. Varun, on my left, started his career with Gemalto, one of the largest smart card manufacturing companies. Does everything that you can think about with Samsung in Southeast Asia. Will not tell you maybe everything, but quite a lot. Responsible for analytics, implementation, Samsung in terms of lifestyle, education, video, sports games. Served on the board of Mobile Alliance in Singapore, and received recognition from Google, Oracle, GE, and Hewlett-Packard for his contribution to his open source software and research projects. So that's Varun on my left here. Yep. Then next to him, we have Matt from Mastercard, president for Southeast Asia, based out of Singapore, manages all aspects of the Mastercard business in Asia. Basically, what he's kind of really interested in to go through when the company reaches the electronic payments to facilitate inclusive economic growth in their vision of world beyond cash. And he has more than 25 years experience of payments, including Mastercard, American Express, and other companies. And then I have on his left, right there, Ron, who is an entrepreneur and co-founder of Coins.ph, which is providing financial inclusion for the underbanked in Philippines and Indonesia. He's basically a founding partner as well before that of Innovation Endeavor, an early stage VC fund backed by Eric Schmidt. And before that, he started TalkBox, a consumer video conferencing company that was acquired by Telefonica. Last but not least, he actually wrote the report of the Philippine Startup Report. And on my right, I have Shailesh, the CEO of Matchmove, one of Singapore's absolutely fastest growing companies, grew by 902% over a 3-year period, launched a groundbreaking mobile virtual card with American Express, aimed at millions of unbanked or uncarded Asians. A lot of different recognitions, including won the InnoTribe Startup Challenge, Deloitte Touche, and other recognitions like Red Herring. He's also done a couple of successful investments as an early stage investor. So this is basically the panelists that you have in front of you. What we'll do is that we really want you guys to be engaged here. So you have the right for sure to ask questions, but I really want you guys to vote the questions so I can see at least 10 votes on the top question that I should ask later on. So please be engaged in terms of the questions you want to ask. I'll kick off with a couple of questions just to kind of warm up this, and then please engage and help me asking the questions you want to know from these guys. So what I'm really curious about, given that myself, I've started a payments company in 2004 and done 18 investments myself, 7 of those in fintech and payments where I've exited, I want to know the future of you guys. So this is because I'm sitting in and investing. So I want to know really what you guys think about Apple Pay. Is Apple Pay really going to kill the market for other solutions and be the all-time winner here in the future? Does Samsung have a chance at all in this battle? And what about others like Ron's company and Shailesh's company? Is there a place for you at all in this Apple Pay dominated world? So I'll start with you, Varun.
So when you talk about Apple Pay, it works only with NFC. You have less than 5% point of sale penetration in the United States where they go live. So we talk about underbanked and everything. So right now you're targeting the sector which is already banked and has credit cards, and they can shop at only 5% point of sale, less than 5% point of sale. And if you call that as domination, I'm slightly not sure about what's the definition of domination. It's like one topping on a big pizza pie out of the 5-6 toppings possible. So it's way, way far away from domination. There are much better technologies which would be able to work with existing infrastructure, which do not require mom and pop stores to buy $100, $200, $300 worth of point of sale equipment, retraining all the people. So there are much more better technologies which can give much more ROI to all the players in the ecosystem. Apple Pay it takes 15 basis points from players, from the banks. It anonymizes a lot of data, which kills the loyalty programs which retailers has. So there is a lot more happening. It's just day one in a 100-year battle, so it's too early, but it's way, way far from domination.
Okay, ecosystem, Matt.
Yeah, well, I think the interesting thing about Apple Pay is that it is, I guess it's been a catalyst. Because in many ways, I think it represents what's so exciting about fintech in general, right? The intersection of mobile, low-cost technology, connectivity, et cetera. So I think that the biggest thing about that is it's showing that if you are able to focus on creating a compelling customer experience, you're going to be able to attract folks. Now, does that mean that's the end game? No, not by any means. I think that it just shows the potential of the segment for transformation. I think from our perspective, the key in the digital world is still trust, convenience, security, ensure and making that payment. But actually, when you wake up in the morning, you don't say, I have to make a payment, right? You either say, I got to have coffee. Most of you guys probably need to have coffee in the morning, right? So if you're able to have an app that's built, you can order ahead, pick up your coffee on the way to a taxi that you've ordered on Grab Taxi, and the payment just happens in the background, but you know it's safe and secure. That's the key thing for us. So I think that what's more important is that the technology, the intersection of all these forces is creating a much more interesting ecosystem and platform, if you like, for innovation. And what we're focusing on is ensuring that we remain the trusted, secure enabler of commerce in this new digital space.
Okay, sounds like you're going to profit whoever wins here. Ron.
Sure. So I mean, we're seeing a lot of great applications that are productizing credit cards, right? So Apple Pay is really just a mobile app for a credit card. But I wouldn't call that like actually innovation. Because actually, if you look at Apple Pay, you look at Square, you look at Stripe, like all these still work on the same infrastructure. So it's the same companies that are still taking 3% and selling the transactions in the back end, Mastercard and Visa. The real transformation that's going to come to the industry over the next decade is actually in displacing that infrastructure. Kind of if you look at what happened with internet and VoIP and how calls are now routed through the internet instead of being routed through traditional PSTN infrastructure. What we're going to see is decentralization, basically, of this value exchange network, allowing parties to transfer value from one point to another without having to go through the existing Mastercard network, basically bypassing that 3%.
Okay.
Shall I go?
Go for it.
So the view on Apple Pay, I think to answer your question, will they dominate and obliterate the world? I don't think so. A couple of facts. In Asia, 83% of smartphones are Android-based. It's only in markets like Singapore where iPhone's much stronger. So Apple needs a path. It needs a track to be able to make this happen. But what I think Apple does do is there's the philosophy and the action. On the philosophy, Apple does set the gold standard. It's what everyone aspires to. Nobody could make their move or wanted to make their move on NFC, and for years Apple did it about it. But once they moved, it did the second thing, which is momentum. And so once Apple starts in a certain direction, the rest of the world takes notice and creates momentum. But they don't have a monopoly on that. And as soon as they've started down this path, the Androids, the Samsungs, everyone else is going to rush in. So I don't think they'll dominate, but I think they will continue to set the gold standard.
Okay. So, okay, we say Android, maybe that's more of a Samsung play potentially. But what you were saying is that there are other opportunities where there is space. And I would like to kind of narrow down into that and say, you know, what is actually the Asian underserved, underbanked opportunity really? And I'll go back to you, Shailesh. What is the exciting thing that you're trying to solve, and how can you win against other solutions in the future?
Okay, so the underbanked, I don't know, but one should assume anyone over 12 in Asia is underbanked, and that's already a few billion people. The underserved, who are they? They're the people who want to buy stuff quickly, easily, safely. And what we're trying to do is bring accepted, proven technologies, such as what Mastercard has and others. They've created this incredible merchant system. They've created security. They've done everything else. All we're doing is bringing it down to anyone who has a smartphone. Today in Asia, there is only 3% credit card penetration, only 3%. and yet there's already 25% smartphone penetration. That's the gap we're going into. What we're doing is saying anyone with a smartphone, it's not a smartphone anymore, it's a mobile computer. It's got processing power and it's connected. What we're saying is we can extract that number off the plastic, put it inside a phone, and make it serve you just like people who have credit cards. And so the market we're after is to enable anyone. We're assuming almost everyone will have a smartphone. I understand Philips just yesterday released a smartphone for $75. So it's safe to assume that smartphone penetration will continue to grow. And what we're saying is the underserved are those who want to be able to make a safe, easy, fast payment. We don't want to recreate what Mastercard and everyone else has done. We want to take that right into the phone, deep into Asia. So at this stage, we are already servicing between 20 to 25 million customers.
In how long time?
We launched 6 months ago, and we believe we're on track to do about 400 million in the next 12 to 18 months. Now, these are people who've never used a credit card, never made an online purchase, know how to download free apps online, want to be able to buy more, and we're giving them card technology.
Ron, you are into a slightly different segment than the problem you serve, but it's kind of a little bit similar. Can you kind of expand on what your company does and where you see the big picture in terms of where you're positioned?
Sure. So, I mean, the thing we've observed really is that traditional banking has been unable to serve the majority of the population in Southeast Asia. And it's not because they have bad intentions, it's really just because their cost structure is very heavy. If you're going to run a bank, you have branches, armored trucks, tellers, all that stuff costs a lot of money. And in contrast, most people in developing countries don't earn much, $100, $200, $300 a month, and which means they don't have savings. So the first time they walk into the branch, the bank has already lost money. What Coins does is it actually allows these people who are unable to access the financial system connect directly with the banks to get financial services over mobile devices. So we're just, we don't have any branches, so we don't have the costs. Our variable costs are more similar to a product like Evernote or Facebook. Actually, a lot of our customers are not really asking how can they pay for things, but actually asking how can they get money, how can they earn, and how can they receive money. It's actually a much more common question. In the Philippines, and the same thing holds in other regional countries, about 10% of the population actually lives abroad and sends money back home. There's about $25 billion that are coming in remittances. And on average, people pay 8% of the incoming funds for companies like Western Union and MoneyGram. So they're basically working 1 month a year for free. It's a big pain, and basically by bypassing the traditional kind of what's called correspondent banking, which is the way that money gets sent from one bank to another, which has a whole list of intermediaries in a way, and sending the funds directly peer-to-peer, we're able to cut that cost down to between 1% and 3%. So we're...
Can you share, if it's allowed, how many transactions you've done, whatever, in the last month or something like that?
We don't share numbers publicly yet, but I know our acquisition numbers are comparable to some of the largest banks actually in the region, so we've been doing pretty well. But we're a young company, we're still small.
Cool. Matt, what is your view on, and also Varun, on the underserved, underbanked, undercard opportunity, especially in Asia?
Well, I think that the opportunity for financial inclusion is huge, right? I think the index numbers came out about 2 weeks ago. Yay, there'd been an improvement. We now only have 2 billion people who are financially excluded, not 2.5 billion, right? So this is people without a bank account at an absolute level. In this part of the world, Southeast Asia, are probably 45% of adults over 15 have a bank account. Vast majority of those, don't have any kind of payment product. So the key thing is that how do we take advantage of the technology that we have to lower the cost of deployment and delivery? So I think that both the other two gents have already talked about that potential. A digitally delivered savings account is 5% of one that's delivered with full branch infrastructure. As long as you've got that ability to have lower manufacturing costs, leverage the reach of mobile, you're going to be able to fundamentally make a difference to these people. And there are a number of things that we want to be able to do to help facilitate that. But one of the key points is giving them access to an account is important, but it's really what you provision into that, right? Yes, there's savings if they happen to have some spare money, but they're really going to transact, right? So they're going to utilize most of that money, but can you then utilize that account, if you like, to offer them micro-insurance so they don't have such a risk of losing savings if there's a catastrophic natural event, of which we have a number. You're providing a destination for remittance services. You're providing the basis for government payments. We've had quite a lot of success in digitizing government payments and putting them on a prepaid delivery vehicle, whether it's a card or otherwise, to leverage that digital infrastructure. Not only does it mean the cost to serve those people is lower, but you're addressing big issues of transparency and accountability within the public sector as well, and reducing fraud. So there are a lot of huge benefits that come with financial inclusion. And in many respects, we talk about having the ability to have this kind of service is almost a fundamental human right. You don't want to have to close your business to go to the bank. You want to be able to connect with your family. You don't want to have to pay 8 to 10% for remittances, because that's just a massive impact and dislocation for these people. So we see a huge advantage in the digitization of financial reach, if you like, to really make a difference for this the most economically disadvantaged people. So there's a fundamental thing that's critical to our vision, if you like, of saying, look, if we can enable another 500 million more consumers to come into the ecosystem that we serve in the next 5 years, we will be making progress.
Sounds like you will benefit from this play as well.
Well, I think it's hard to say. I think that what's more important is that we are enabling that to happen.
Yeah.
The reality is that if you're making a $2 payment, you've got to change the incentives. You've got to change the business model to make it work for everybody, because you'll need a public-private partnership to get there, right? So this is not a similar kind of yielding transaction. It's a different kind of business model. But within the balance of the facts, the point is that that's a more important thing, is getting these guys into the system. In a lot of cases, they may be using an on-us system. We're going to be providing some of the connectivity to that. But the reality is that if you're going to create a sustainable system, the parties are going to have to all have a commercial incentive, because you're not going to, charity is going to run out.
Sustainability and underbanked, Varun, is that something that, what's your view on that in general and Samsung specific?
From Samsung's perspective, we are the world's biggest digital commerce enabler, because if you see the number of connected devices which are in circulation right now, Samsung is the biggest distributor of connected devices. And in addition to what Shailesh said, the low-cost phones, a lot of it is also about shared phones. You have dual SIM phones, you have SIMs with 1 week battery, which are going to work in rural areas. So for us, it's more of how we can grow the pie, how more people can have connected devices, which they can use for different kind of use cases. It could be for local self-help group-based application. It could probably be a USSD-based application, because probably that works. It could be an internet-based application. For us, it's how can we enlarge the ecosystem as fast as possible and bring more people into it. If that means a family in rural Malaysia shares that phone, and 4 people in that family have different profiles on that phone, and have 3 different cards, 2 of them sit in the phone, and third is swiped in when the son of the family who's working in Kuala Lumpur goes back in the weekend, that's fine.
So can you beat the $75 from Philips that we just mentioned for a smartphone?
I would say we don't.
Or can you give them out for free, which I would love?
Yes.
Well, if you are willing to bankroll it from your fund, then probably we could look out for a JV on doing the world good. Or if Bill Gates decides tomorrow that he will create a project in Southeast Asia to just like spreading malaria vaccines, he wants to spread phones, sure, we could figure out a solution for that. But it's not a case of race to bottom. There are even phones cheaper than that. The question is how many people you can get. If you look at a Mozilla phone is available at $25 US. It was launched in India and Bangladesh last year. So you can go even, and it's not even Android, it's an HTML5 phone. It's not, we don't need to make every such possible device, and we're not in a race to bottom. Our objective is how we can increase the pie at the highest possible speed, while respecting our ecosystem and providing as much value and opportunities to all our partners. So publishers, content sellers, hardware sellers, people who do e-commerce, people who process transactions, all of them are ecosystem players. How we can grow the pie for them rather than fighting with each of them. It's a race towards how fast we grow with everyone.
Okay. So let's think a little bit now. We had the internet in terms of PCs, we have the mobiles, and that is all kind of exciting. But how is it really going to look like from 10 years from now? 10 years from now, when data is maybe the most important part. I don't know if mobiles exist. Maybe they do in another form. So what is actually the next thing after the mobile? What is the next thing after the existing business models, which is basically based on that you get a fee for your mobile and you get 3.75 whatever merchant transaction fee, which is kind of old models. So we're going into the data world. We're going into whatever Internet of Things, wearables. How is this going to be evolved in the next 10 years? I would like to have all of your comments, and whoever wants to kick off, please start. Matt, I know you're prepared.
Yeah, sure.
Because you don't exist in 10 years,
Yeah,
do you? Mastercard doesn't exist in 10 years.
Well, I think it's good. Andy Grove said, only the paranoid survive, right? And I think that the critical thing is you have to be able to reinvent yourself. And I think that we've spent a lot of time, spending a lot of money working on tokenization for the first step of digital. And there's no reason why that, I guess, that innovation won't continue. We've got a very strong legacy of that. That's not to say that how we do business, who we do business with, won't change dramatically over that period of time. We're going to have to go to more collaborative models. We're going to have to think about doing things very, very differently if we're going to take advantage of the huge, I suppose, confluence of factors when you've got 40 billion connected devices and sensors all sharing data proactively with each other. The reality is that if we all knew what was going to happen, we wouldn't need to be sitting here. But the reality is that what we do know is people are going to you want to be able to solve a problem, right? People are going to be overwhelmed. How do you simplify? How do you make things super convenient? How do you make it seamless? How do you still empower people? How do you give people the feeling of trust? And those truths will remain. How you distribute it, the channel, the technology, the security, that will all surely evolve. I mean, relatively near term, we talk about persistent biometric technology. How do you link that in with cloud-based payments over multiple devices? You really start to think about huge numbers of degrees of freedom. But I think the reality is that change is happening. So we can talk about all the cliches around innovation, but I think very much in this space is very, very true. You're going to have to be very, very focused on customers. Very focused on customers.
Yep.
And really solving needs in a seamless, highly secure, highly convenient way. And everything else will happen in the background.
So same question, just kind of rephrasing it. I'm just wondering, where is this real innovation 10 years going to happen? What would Steve Jobs be? Where is the next Steve Jobs? Where is it going to happen? I mean, Shailesh, Ron, Varun, in any
I think
order.
I'm going to answer that and then maybe add to what was said by Matthew. Where is the next Steve Jobs? I think the next Steve Jobs is probably sitting somewhere in Korea or Japan. Or Indonesia or Bangalore, somewhere on this side of the world, probably getting to know how to deploy, to innovate, to especially find teams and execute. And I do think that's going to come because the other thing, if we look back at Steve Jobs, of course, a great mind, great executioner, but also situated in a very powerful market. That market never existed here for the longest time. Now it does. And that's one of the biggest necessary ingredients for innovation to scale on a rapid space. So I would say the next Steve Jobs is somewhere in Asia, and I would also even suggest that there's not just one, but probably 10 Steve Jobs on the way. As to what's going to happen in the next 10 years, I think it's safe to say that the Internet of Things, connected devices, less and less for us to have to carry in terms of paper or ID, faster, seamless transactions all coming. But what we see in 10 years from now is that of the 70% of economies that are today cash-based in Singapore, there are $5 trillion economies in Asia. And yet 70% of the transactions outside of Japan and Australia are cash-based. It's going to take a long time to get people to drop cash, for merchants to drop cash and switch just to electronic payment. Now, at that time, as we move along, all these new Steve Jobs are going to come along and introduce innovation to make it better and faster. So I think some of the things, as Matthew says, when we look at the future, we don't know. But what we can predict is what will stay. And I think what will stay and increase is that people will want to buy. There will be an exchange of goods and services. There will always be money in some way, shape, or form. And there will be some sort of underlying system that needs to be able to make that happen. Those things will persist. How it actually transforms and metamorphosizes, I think, will depend on these 10 guys who are coming. And I mean, I don't mean to be gender specific. They're probably, mixed male and female.
Yeah, it just was my starting point. More women in payments, because we need to think differently here to get the new Steve Jobs, that's for sure. So what about Ron and Varun? What do you think about in 10 years? How does this look like? Are you conquering the whole world and Apple doesn't exist? Or what does it look like, Ron?
The structure is changing, right? The power is going back to the consumers. It's really product that wins, and infrastructure becomes like commoditized. We've seen this in telco industry, and the same thing is happening in money. Today I can buy 3 products. Right? I can remit money at like 8%. I can make a payment at 3%. I can send a wire for like $25. But actually, all these are actually exactly the same thing. I'm just sending money from one place to another. And the amount that gets charged is like arbitrary by the gatekeepers because there are so many stops on the way. It's like when I used to send a piece of mail and had to go through all these postal services. And I think the future, we're already seeing it, is the blockchain. So value exchanging hands directly from one party to the other. It doesn't mean that people will be using new currencies like Bitcoin. I think people will be using the same currencies they're using today. They're going to be trusting the same institutions they already trust today, like Mastercard, like banks, to secure their transactions. But they will not be susceptible to kind of these intermediaries that are taking money along the way. And it's going to obviously facilitate new applications. It's going to reduce friction. It's going to allow governments to have better controls on things like money laundering and tax collection and auditing of companies, et cetera. It's really a brave new world.
So, that's extremely exciting part. The whole kind of Bitcoin, Ripple, Stellar, blockchain, whatever discussion. So given that you are a little bit in that area, where do you see that fitting into the future of payments in 10 years? Is it going to happen, or which perspective do you see from all these different, from having, Bitcoin completely decentralized, Ripple over-centralized, Stellar being somewhere in between, in terms of how they see the new payments will look like in terms of infrastructure? What is your bet on that?
Yeah, technology is critical, but at the same time, it doesn't really matter, right? So it's already happening. We have housekeepers in Hong Kong sending money back home to the Philippines. They're using the blockchain. They have no idea. They're putting money in one place, and they're getting cash in the other place. It's happening instantly. And we're breaking down like a whole bunch of existing existing concepts that were have been there for decades. I think, it's happening. It's happening. And once it's out, when you look at consumers, right? Consumers don't care about the technology. The protocols are going to improve. If it's TCP or UDP, or that doesn't really matter. What matters to consumers is they're able to achieve something in a faster, easier way. And if they can, they're going to migrate. They will not care at all what your if you're a Mastercard or Visa or DBS or any of those things. They just
Varun, in 10 years, what does it look like?
From where I see, because of, as you said, the things like blockchain, the existing institutions will evolve. They are embracing a lot of these new technologies. So existing institutions and regulators will become more proactive. Instead of ignoring some of these, they will start to embrace, and probably it would be some of the developing economies which will embrace them more. because developing economies don't have Western Union is not owned or HQ'd in a developing economy. All these, the traditional companies which take all the margin are sitting in the developed countries. So developing economies have a huge incentive to create a parallel vehicle which can challenge the oligopoly of the big players. They would most likely support the new technologies like blockchain with regulations, and the central banks will also support it, and that will start a motion which will ensure that the rest of the ecosystem, which was operating at very high margins or probably arbitrary margins, they will need to evolve to compete. Just like telcos have started to compete with different offerings, there was required for a movement to happen. Unlike OTT in the telco space, this new technologies would be that momentum supported by regulators and governments in these markets.
Cool. I like that. Now we're going to do ping pong. It's going to be quick. First one is to Matt. I'm going to activate the questions. It got more than 10 votes. Let's see if technology is with us, because I see that my internet connection is not working that hard on this one. So I'm going to throw it out here you go. How much will credit card percentage fees be impacted in the coming days due to competition?
Well, I think that the important thing is that you need to understand where the economics come from, right? So just from setting the level straight, Mastercard, we're processing over the network. So we're charging click fees that are basis points of the transaction costs. It's not at the merchant discount rate that are established within the financial system. We, in some cases, set and change. In other cases, it's mandated by regulators. I think that the critical thing really from our perspective is you look at the benefit that comes to merchants and players from going to electronic. And so how do you create value? I think that the main point is about how do you create and release value into the system. So if I am, say, creating a digital payments community interoperating between closed-loop networks to deliver government benefits, and the government might save $300 or $400 million a year in terms of just the manual processes, fraud, leakage that they might have in that system. The economic value to the program managers could be delivered via savings, and the transaction cost could be virtually zero. So I think what's going to more than happen is you're going to see business model innovation.
Yeah.
And that's going to be natural, because the huge opportunity, as Shailesh is sort of starting to talk about, middle class spending today, $6.5 billion, going to go to $20 billion by 2020. We say 85% of those transactions are cash. Japan being one of the largest cash markets. Huge opportunity in fragmenting of business models. So you're going to see a much more competition that will have its inevitable effect, but also we'll see a much more of a greater range of different, more innovative business models that are there to serve the needs of each of the communities that you can reach with digital.
Great. Another ping pong. This one is for you, Varun. What is the strategy to encourage tech-averse folks, such as the elderly, to use mobile payments?
I believe the elderly folks, I won't say they are tech-averse. It's just that the technology, in a lot of cases, hasn't moved fast enough to solve things for them. They are not against technology. Those are the guys who moved from probably letters or the old phones to actually mobile phones. It's just that the technology needs to move faster. It needs to understand that, okay, these people cannot read too small a print. The UX needs to be such a way. The credit card probably needs to be handled a specific way. So I would say the strategy is to make technology much more simpler, much more easy, and translate it in a language which these elderly people will understand. Because these people have used financial institutions in their lives. They have earned a lot of money, maybe if not much. They understand money. They're not dumb. It's just that we haven't, as a technology industry, at Take Accountability, we haven't done a good enough job of translating and taking that value proposition to the people.
Shailesh, do you want to take a crack on that one?
Well, elderly people, especially in Asia and certain countries, continue to grow as a population. Some of this is being addressed by governments, some addressed by product companies. I think the main thing for elderly people is that if they see trust, whether it's on a plastic card or on a statement from the bank or a trusted logo on a phone, I think they will move much faster. So the tech, of course, needs to change, readily usable, accessible. But the key thing to moving the elderly on will be trust.
Great, thanks for that. We have 2 minutes left, so I'm gonna go for the last one that got more than 10. See if we get that one. Ron, if you wanna try, why only a few competitors in the credit market, for example, Visa and Mastercard?
Network effect. It's very hard to build that size of infrastructure for a single company.
So Matt, looks like you might stay in business the next 10 years.
Well, as long as we're paranoid enough and we innovate enough and focus on the customer, absolutely.
All right, anyone kind of last question? Do we have time for one more? One more we go. Okay, so this is a specific question on the potential in the Singaporean MPOS market. Oops, sorry, that was a very specific one. Is anyone want to take a crack on that one?
Well,
Matt, maybe?
Yeah, I mean, I think that there's still pretty large opportunity. I think it's a bit challenging in the sense that people want to find the right kind of underwriting model for MPOS. I think that you've got to make sure that you've got an innovator who wants to push to drive the change, and you've got to find the right verticals for you to compete in where you're delivering value. But as long as you can do that with a business model that makes sense, and where you're delivering direct apparent value for the retailer, maybe with a different kind of economic model. Some of the convenience segments that we work in, we've got very low pricing within the system to encourage contactless payments, to encourage convenience payments. That's going to be critical. So I think that there is an opportunity, certainly, if you think about Singapore and I guess the penetration of merchants, probably about 70,000, I think, terminals in the country, way larger number of SMEs in the segment. It's a question of how do we ensure that we deal with hawker centers, convenience, retail payments is the big one, and work is underway. So I think watch the space with the right degree of innovation and the right degree of business model. I think we'll see quite a significant expansion in MPOS in Singapore.
Great. So I would like to thank all these panelists. I see that we have some potential of the next Steve Jobs just around me. So if you have a lot of money here, I'm just early stage investor, so these investments are too late for me. If you have big pockets, put in money in these companies. And Samsung and Mastercard, you've got to support these guys like Shailesh and Ron. We need more women to really disrupt this industry, I think, to really kind of figure out. And maybe the next Steve Jobs is in Asia, or actually it sounds like it's pretty sure, actually, from what we have heard from Shailesh, at least 10. So there must be a lot of you guys that are thinking about new ideas that can come to me, and I can try to help you. So thank you very much, all of you, for listening into that. Thanks for the panel, and let's keep the dynamics until the end of the day.